Hello, this web video will provide a practical application of using the JS Desktop to analyze a specific market. The application provides the technical facts that define the current trading environment. By identifying the market's technical state, its price structure, and the inherent strategy themes, a comprehensive strategy foundation emerges. It is this foundation that the context of every trade signal should be considered, and every trade tactic aligned. We can use the market grid to identify the market we have interest in. First thing we want to note is what is the market state. I'm going to do an example on the S&P 500 futures. Today the market is in a bull trend state. So we can quickly see the attributes of that state, where this is a good momentum state, good for momentum tactics if you like to trade the trend. It's a bull trend, so it's a positive bias. Type of state is a trend positive state, and we can expect market volatility to increase. The commentaries define what a bull trend state is, which is a market that makes higher move highs and higher move lows, holding positive structure. That's the definition, that's the expectation of this market state. So we've identified this state as positive trending. Now we want to focus in on the structure of that state. What's the price structure? The R level defines the bias, and it's part of the price map, and the R level is above the market in a bull trend state. So that's saying that sentiment is negative. So we have a market that's in a positive trend, but sentiment is negative. So we've got things are out of sync in this market. And when we read through the commentary, it's basically saying, prove it to me. You know, if this market is truly trending higher, it should just break out above this upside pivot R level and just go. And if not, we may be in for more of a corrective trade. So price structure wise, we're in a positive trending market that may be in for a correction, and that's defined with the R level at the UP. And below that price point, we may be in for this strategy theme. So we've identified the structure as potentially negative and corrective, and now we want to look at what are the strategy themes. So we have our optimal themes. We are in a bull trend, and we have a buy DP fade. So if the market can stabilize above the downside pivot, that is the level that's going to keep this bull trend intact. So, and these image aligns here. So in the S&P today, it's in this example, it's 2089.5. As long as the market's above that price point, that means that the market is holding positive structure. And the other optimal strategy would be if the market does start to accelerate, it's going to give us a signal above this price point. So it'd be a good area to look for breakout strategies. And on a hedge side, you know, we do have this negative sentiment bias. So we have a sell UP reversal, where if the market comes up here and rejects off gives us a reversal signal off this resistance at 2108.25, or we can also sell the market below the downside pivot on a sell DP breakout, as this would be a break in the positive structure and would be a fresh sell signal. These commentaries give further insight to what could happen, and here we're saying do not fight negative structure today, as it might be the beginning of a corrective trade. And you know what the reason for that is, that the market's been in a bull trend. We have negative sentiment, so sentiment's starting to turn and potentially forecast a turn, and if we get a break in structure below the downside pivot, it's going to be significant, confirming that sentiment bias, and so there might be some potential to the downside for more of a corrective turn in this specific market state and structure. It's important to remember that every market that is in this state, bull trend, with this structure, R level above the market at the UP, will have these same strategy themes. You know, this is what you do when the market is in this state and structure dynamic. So we've done our work. We know that we have good market awareness. State is a positive trending market. Structure has it we might be vulnerable to a corrective trade below 2108.25, which is the R level. Market is holding positive all night above the directional, so that's a sign of strength as long as it's holding a positive structure. But we're going to be concerned at this level, and we're also going to be more aggressive on any break in structure because sentiment is negative today. It's an unemployment day, Friday the 6th, 2015, and we are ready for the session. ARK comes out and we have our event, and the market starts to break structure, and we have it breaking below the directional and giving us a rejection off that directional, confirming that break in structure. I want to take a moment here to talk about breaks in structure and definitions, and I'm going to go to the tutorials, and we're going to take a look at the playbook tutorial, and we're going to go into talking about entry strategies and EXAD, which is entry exit adjustment differential. Now, this is really the zone around these inflection points, and we're going to look at some breakout tactics. So we have a market that's positive structure and we're breaking structure here, so this is going to be a downside breakout. So I'm going to go right to an example where you have to flip this for the downside breakout in this example, but we have a strategy where the market breaks through the inflection point and it gives us a pullback to that inflection point and then stabilizes and continues on. And so that's the situation that we have here, where the market breaks through, clears through the EXAD zone, and we get a pullback to the inflection point, giving us a break in structure, a breakout signal. Not a major signal as of yet, because we haven't confirmed a break in structure of the downside pivot, but it is a good transitional breakout to the downside. So we continue with the session. The market sells off, and one thing about any signal on the price map is the price map defines the segment moves the market is trading in. So a trade from the directional would anticipate a move at least down to the downside pivot. If you're entering a market at a minor level, you're looking for more of a half segment. We call this the average price map distance, APMD. And so that's your expectation at least. Here we have a situation where the market is breaking into our key support level. This is one of our optimal strategies, a buy DP fade. And what's important to note here in every day is that you're looking for what strategy themes are in play, what strategy themes are playing out. When the market's in this situation, it has broken structure here. So as it's moving up, a positive trending market should be holding positive structure and continue to hold positive structure. Once we get a break in structure, this is a tell. So it's not only a signal, but it's a tell that there might be a break in structure. And what we already are anticipating is there might be a negative corrective situation day. And we may have, and this theme may be playing out. So that the earlier you catch on to is it an optimal theme day or a hedge theme day, that really makes things easier, and you get on in sync with the market sooner. So you're looking for those tells of what strategy theme is playing out. And at this moment here, it told us that the hedge theme might be in play, and it's in line with this signal. And the market is starting to build negative structure. Even though we're in a bull trend, one of the key things about a trending market attribute is that there's good momentum, there's good trending. So in a bull trend, when the market does break structure, we should anticipate it to start to hold negative structure. And so that's something to consider when we're taking this fade move here. And if we are taking every signal and you have a tactic that's giving you a buy signal here, it's valid. It's just that there are some other themes that are in play with this state and structure that are telling you to maybe dial back on that opportunity. And so as we move forward in time, we get a little bit of a positive reaction, but then the market immediately starts to deteriorate. And here we have a breakthrough our downside pivot, and the market gives us a reaction back up to our minor interior critical range level. A couple things about this moment in the session. We are anticipating, we've identified this market as positive trending, and we know that You know, again, it's always a fact focus. What do you know about the situation at the moment? Well, what you do know is that the market did take out this downside pivot. And if it was going to really be a bull trend day, it should hold positive structure. It should never have broken structure here. The fact that it confirmed below this point is telling us that we're no longer should consider this bull trend optimal strategy theme day. It's over. This isn't going to happen. We're either going to have a hedge theme day, or we're going to just kind of have a sideways choppy end of the day, and the market's not going to do much. So at this point, we're thinking the market's either just going to digest and go sideways, or we may have a transitional hedge day. So again, we go back to facts, and this is something that you can do in real time. It's not after the fact, because you have this playbook that allows you to kind of give you that forecast of what, you know, what are the facts. Always go back to the facts. And fact is the market has been holding negative structure. So at this point here, we have to respect that negative structure and say, you know, is this theme going to play out? And so at the very least, you're looking for a move back down to the downside pivot, but there is the potential for more. And the market continues to hold structure, negative structure, and then starts to fail. And here it confirming that the downside pivot is a valid level, and then it gives you a little retest structure. Again, if you, whatever tactics you're running, you know, you're waiting for your tactic signals. It's all within the context of this market state and structure. So as the market's starting to provide some clarity that we know that there's the optimal state's off the table, the fact that we are now below the downside pivot, you know, is leaning more on this hedge strategy. What's the opportunity here? You know, if we go into the tutorials, and when you read through and learn about the price map, and we talk about breakouts of the critical range, we know that a breakout of the critical range, our minimum target is the downside target 1, but we should anticipate a move to the DT2. Anytime you get a clean breakout, we're looking for 2 APMDs. So 2 APMDs is going to put us down here at 2070.5. And so that's the context that you're looking at signals in this zone. You've got your inflection point defined. You know, worst case, the market's holding negative structure below here. If it's going to build negative structure, it should really start to build negative structure below the downside pivot now. And we know that we have a minimum target at the 2080, but our objective for this trade is going to be down at the 2070.5 level. And so the market just starts to unload, and we get a test of the initial target. One thing that's important about the price map is you can use it as a position management tool. So as the market's approaching these levels, you should anticipate a reaction. And you should also anticipate how are you going to adjust your trail stops. How are you going to adjust your profit give back? What are you willing to give up to pick up another 10 handles? And it's, you know, this is what you need to decide. And if your decision is I want to take money off the table and I'll put that trade back out as long as the market's holding negative structure, as long as I get another signal, that's it. What you don't want to do is be in a situation where you're anticipating a bounce and you're lowering your trail stop to somewhere where that's where you actually want to be reselling. So, and you know, take your profits on profit surges and anticipate those decisions. But you should also keep that vision that what if, you know, where can this market go, and keep that trade vision. As long as we're holding negative structure, the market's going to 2070, and that's my story, and I'm sticking to it. And here the market, you know, plays out and attains the target. So at this point, the market has achieved 2 APMDs. And it's been a pretty linear move. It isn't, you know, it is a economic release day. It is a Friday. There is definitely the potential for an event. The key thing to remember here is the market has attained a major target, and any day, any state that a market breaks out of a critical range and attains its second target, it's definitely significant. We never know what the market can or cannot do, and you're going to have your own trade forecasts, but this is definitely a target and should be respected. The risk management of that trade should be anticipated for that reaction. So if you're looking for an extended down move, where's your negative structure points? This is really the first break in structure, and this is the second break in structure. So really, for a long-term negative move, the market can rally back up to the 2080 initial downside target, number one, and still be bad, kind of holding this whole negative structure. So that needs to be considered for any long-term move. As the day plays out, we do get a positive reaction. What you don't want to do here is getting your trail stops too aggressive, so you're not getting dinked out. Here the market gives us a retest, and again, now we're looking at near the end of the day, and as the market confirms this level is a good level, it gives you more confidence that if this is really going to release, we should see this market hold structure below this major inflection point. Literally just walking down the staircase, and as the major level is taken out, and it confirms that it's a good level, you should see it do this and hold structure. And this is just classic price map movement. And at this point here, it's holding structure, and this is kind of a break in structure, telling you that maybe we're done for the day and we're not going to have an event. And what time is it? It's after 2. It's just after 2 o'clock. That might be the case. And so the remaining of the session gets kind of choppy and ugly, but this is kind of a good tell that this was going to happen going into the close. So this analysis is the same for every market every day. What's the market state? What's the structure of that state? And what are the strategy themes? And then you take the current price and you put it on that canvas and identify what strategy theme is in play. And if you have a market that's trending, and the optimal theme is going to be a trending strategy, and you see on the intraday action that trend has been broken, or that structure has been broken, it eliminates that hedge strategy. It immediately gives you two other options. We're either going to have a hedge strategy, or we're going to have a kind of a non-event day. And so that's where you can start to anticipate these themes earlier, and you can look for those tells that tell you what theme is going to play out, and that's how you can get on top of the markets. That's how you can get ahead of the game, and the same type of clarity that you have at the end of the day looking back, you'll have that in real time. And that's what market state awareness really gives you. It gives you that knowledge of what's true and what are the real facts, so you can anticipate and trade more intuitively. If you have any questions, please don't hesitate to contact us at info@jsservices.com. Thank you and good trading.